So I want to start with the boom. Miami has broken record after record since the pandemic, immigration, rents, housing prices, and you all has built on that demand quite literally. So let's talk about population growth. Are people still coming to Miami at the same clip they did during the pandemic? And you think they're going to keep coming?
Yeah, I mean, things have slowed down for sure since the pandemic, but it's still healthy. I mean, if you just look at the numbers a little bit, like on the amount of a multifamily that Miami's delivered and absorbed, it's pretty incredible. I mean, we'll have record deliveries this year and next, and occupancies in most markets are still above 95%. So um, even though getting the deals to per new development has become a lot harder, where the demand is, it's pretty credible given the amount of supply that's come in. So you still have a lot of demand for housing in all South Florida, and so that's great.
I'd also say, when you think about the evolution of a company moving to Miami, first the CEO comes, they can buy whatever they want. They start working out of their house, get a small office. We're just seeing the buildings like 830 Brickell or other office buildings all getting leased up and built out today. So that means this next wave of employees that are coming. That's thousands and thousands of high-earned employees, many of which are coming from urban environments that are looking for multifamily, and others who are not, who are looking for more suburban experience. So absolutely, I mean, we're seeing, as Inigo said, we're partners with Jeff in the project up in Dania, Plantation, Fort Lauderdale, downtown Miami, and every building continues to see a strong demand at the record supply. And what's interesting is now it's hitting harder to finance, which then leads to that shortage of supply. So we could find ourselves in a situation actually where all these people continue to show up, and we once again have a shortage of supply.
Yeah, I mean, just carrying on, backing up in. I think we're still kind of in this expansionary phase. We're still seeing, certain demographics of those folks that are moving into our buildings, and I think it's not only the migration that's coming in, and I think I agree with you. I think we're in that second inning before you actually all the incubators start turned over, and we're just such a diverse city, and it's so unique that I think the sky's the limit, but in general, I think also what's really happening is that there's a lot of folks that are in transitionary phases throughout. They came by you or they well whatnot, and some of them are more or less. Some of them are being a little bit priced out per market, depending where you're at. And you're starting to see a lot of butts in. And for the most part, our buildings have gone from having rent to income ratios of 33, 35% to 20%. Our household incomes in our buildings have doubled and tripled in some cases. And that's a lot of it is due to good salaries that are quite upstate and more families that are moving into our communities. So I definitely think it's here, and I think it's honestly just the beginning. We're absorbing the units that you need to absorb right now. Every sub-market is a little bit different, but I think for the most part, we're going to continue seeing that for many years.
So looking into 2025, 2026, how are those expectations around populational growth influencing your strategies? Because obviously you don't want to build too much, don't want to build too little. How are you thinking about that?
I think rent will be stagnant, and maybe even face a little bit of downward pressure, in the short term. But because it's going to be, or it's become so difficult to get new projects off the ground, supply is being reduced drastically. And if you see the amount of starts last year and this year, they're down, way down from peak. And I think that will continue for some time. So like Nitin said, we could find ourselves with a shortage of supply, and several years from today.
Yeah, I'm going to give you an example. Adam Newman spoke a little earlier about flow, right? So we built an apartment, sold it to him, he converted it to flow. Between the brand and what they're doing, as well as what we did with Miami World and getting the retail open, rents are actually significantly higher. As Inigo pointed out, rents are actually pretty stagnant given all the supply. His occupancy is 98%, and his rents are significantly higher from just the year ago. So that's part neighborhood, part brand and operations. But now you have a second thing happen. We're building the second phase of that. We're done with 466 apartments that will now be flow house condominium. So now you're decreasing the supply of the neighborhood by 466 units, and nothing new has started. So we've seen this with a couple other projects that have converted. We had another project in Fort Lauderdale right behind the Four Seasons that we built. That was going to be a luxury multi-deal, just given where the prices are. We opted to change that into a condo that we'll be launching in short order, bungalow. And it's amazing the opportunity on the condo side, which we were never expecting, but it just continues to decrease the supply. So you have low starts and projects converted. It could lead to a real opportunity for multifamily going into starting in late 25.
Yeah, I think for the most part, just I can hear, your starts are, you're getting record deliveries now, especially when you look at different sub-market locations. So you're seeing a little bit of softening, and not necessarily in the market rent, but you're seeing it on the concession side to lease up these buildings. But I think once you start going into like 2020, end of 2025, 2026, you're going to be at a point where we're going to be very in supply, and the demand is just going to grow twofold from there. So if you're a merchant builder like we are, where we exit our deals after we stabilize the asset, it can get up to ground in that way. So as far as come back, Alex roll, you're going to be one of the newer products 2 to 3 years down the road when you go to exit these deals. All our business strategies are a little bit different. Some may be a little bit more long-term holds. Some may be assets that you are disposing of. But as we all know, these capital markets are a little bit tight these days. And just depending on, the 10-year treasury went up. I think we're at 4.6 right now. It's just crazy. 2 months ago, we were at 3.6. It's just so much volatility and uncertainty. Hopefully now things get better and we start to even up.
How do we get off the ground now? Because the prevailing narrative is that it's impossible to build market-rate multifamily as it stands. I mean, is that true?
It's not true. I mean, it is definitely, it depends a lot on the market, or on the sub-market, and it depends a lot on what you're building. Garden is still a feasible product. Now, what's difficult, it's finding garden land. And the capital stack's going to be different. Senior debt's going to go, they're not going to go to like a 65% LTV. You're going to the ref want to go with, fair or higher. Bank is going to be like at 55 to 60%. So you're going to need, groups like us that are conservative. It requires more equity, which is harder to get a real multiple on your equity right now, unless things to speed up.
Yeah, I think if you look at what happened in New York a few years ago when everything stopped, there are now record rents. Not because of anything else, but there was a dramatic loss of supply. That's what's basically, we're living through that right now. So with all the COVID enthusiasm and excitement, we saw all of this stuff happen. Does it feel like costs are going to go down the way that we probably had hoped or thought? So that's to blame all the contractors that are out there in the ruins. Inigo said, rents are flat and rates starting to go down now that pop back up. We'll see what happens with the Fed meeting tomorrow. So I think that all comes back to what are the rents. And as supply decreases, I think we're going to see the same boom in rents in South Florida, which will prompt us all to kind of move forward. The other thing that's interesting about this particular panel is we're all family businesses, right? And so we don't have to do projects. We don't have like a machine, so to speak, that we need to do anything. We do it because we want, and we're all based down here. And so I think that you see people who can get financing, do have equity, have pieces of land they've been working on for a little while, so may be able to get things off the ground that a new-to-market person may not have been able to. And that'll just continue over the next 12 to 18 months.
Yeah, I mean, the other thing is if we have 6,000 units on the pipeline, between West Palm, Broward, and Dade Founder. And I think one of the biggest advantages that we have is that we're just completely a vertically integrated platform. GCs, we self-perform our deals. And because of the economies of scale, we're allowed to bring down a lot of the costs. Not saying, we're bringing it down 15 to 20%, but we're bringing it a good amount where where a lot of deals are still penciling out for us. It's just like you can only do so many deals at one point. It's better to not do a deal than to do a bad one. But for the most part, I think that's why you have seen construction starts 70% guys than they were the year before, and the year before that. And I think if you can get off the ground now, I keep saying it, if you can get off the ground now, you're going to have an advantage in 2 to 3 years when this market starts picking up a little bit, especially on the capital market side, which has been, but what people don't understand is a lot of times, rents has softened, but it's not only because of supply and demand issues. It's also because developers needed to meet a lot of their debt obligations and not have to go into situations where you're buying interest rate paps and that course developers what was 20 to 25 units a month. Now you have to get it up to 35 to 40 so that you're not in a situation you don't want to be. Construction loans went from 4% at 75 to now 9.5 on the same deal in 2 to 3 years, and it became problem for many in this field.
Then you brought up New York, which I flew in from yesterday. And one of the reasons we had such a hard time building those 2 years was because we lost a key tax abatement. And we need that for projects to pencil out if we're building affordable. And I want to sort of use that to get into live local because, when we talked before this, I think all of you said that you had looked at live local deals and they just didn't make sense. Why is that?
I don't think it's not that it doesn't make sense. It just depends on where you are. So like in downtown, we have enough density where we don't need it. But I think what you bring up is a very good point, right? Because people started saying that we need more affordable housing and workforce housing, which is absolutely true. But over the last 4 years, a lot of cities stagnated to decline. We had a hockey stick of growth, further exacerbating the problem we already had on affordability. So rather than take away programs, the city, the county, and the state have all tripled down on more programs to motivate developers to do this. So there are plenty of live local projects that are going on throughout the state, and it just takes time to work through some of the nuances on it. Like, for example, if you live in a single family house, you don't want a high rise right next to you. That seems fair, but it needs to go somewhere. And so those negotiations have happened. It's been updated, and now you're seeing projects get approved. From an affordable housing standpoint, I know both at the city level and county level, there are record amounts of deployment of affordable housing dollars to help subsidize projects to create more workforce housing, reducing parking restrictions, which helps, focusing on transportation, which helps. So I think that the benefit of South Florida versus a lot of other places is instead of cutting these programs, we're trying to find creative and innovative ways at all levels, Republican or Democrat, city, county, it does not matter. Everyone is trying to figure out how to build more workforce and affordable housing.
Yeah, I think for the most part, look, I don't know a live local deal that's gone up, all right? It's gone up, and for the most part, like it just depends. Like a live local deal is not going to happen in downtown Miami. It's just not happening, right? Although the rents are there, it's just when you look at costs and you look at rents and you look at rent growth and where we're ranking, it's not accretive. We don't build buildings free like you can, right? This is a business for us and for families and for investors. It's hard to pencil those deals out. So what's happening now, and I think it's going to be a little bit of an issue, is that you have great brokers trying to sell sites now that they got live local. It's about an acre and you're going about 35, 40 stories, and you're getting about 600 to 700 to 1,000 residents. So guess what? No one wants to go up, 15 stories of parking. No one, want to live in a building that actually has parking spaces. And it's just not, something that's feasible for guys like us. And then say, well, instead of paying $50,000 a unit, you're going to be paying 20, but it still doesn't make the deal work, right? So we have to be responsible on how we approach these transactions and these deals. And I think one of the other things we need the local governments, the CRAs of the world. They have to work. They have to work with us to incentivize to make these deals happen. Because as much as we want to fill in this gap that needs to be filled in of attainable housing, it's extremely difficult to without having any assistance from any local municipality, CRAs, or what.
Yeah, I agree 100%. We need a lot more, funding from local state governments, because the affordability crisis of South Florida is only going to get worse. I mean, this city went from being able to develop horizontally to mostly going vertical, and the cost to build vertical is just a lot more expensive. And development is a for-profit business, so they've got to figure ways to bridge the gap and get more people wanting to make a profit and getting into that side of the business, because if not, this issue is going to be a very big issue in the future. It's not getting any better.
Is there a tipping point with the affordability crisis? I'm just trying to figure out how that might, play out long term, where it could have negative effects on the market beyond just people not being able to afford to live.
It's a huge issue, I think, politically. I mean, at the end, residents in a city need to be happy because they're going to vote, and when they voted, they're not happy. We can get some very bad ramifications for it. I think housing is it's one of the most important aspects of people's lives, and the big issue is that the cost to build has risen for a substantial amount of time faster than inflation, and that has hit the bottom sector of the economy the most. And by the way, in construction, if you see the cost to build a car maybe 30 or 40 years ago, it's gone up today, but it's gone up negligible. The cost to build a house, the cost to build, a high rise, it's gone up drastically faster than inflation. And that is a massive problem. And I don't think that's going to get any better. I really don't. It needs to be subsidized. This is a private public partnership that needs to be done, that the public sector needs to figure out ways to incentivize the private sector to build a lot more affordable units.
Yeah, I mean, it's 100%. There's things that we cannot control certain things. We should have concrete and rebar, same as everybody else, right? How much you use of it, that's a different story. But when you look at, for example, capital markets, what happened on the debt side 2 months ago to today, where the Treasury is versus now, and you look at both policies of whether you are voting on the Democratic side or on the Republican side, and you look what the bond market has done in the past month, is because they're pricing in that these policies that the government has come forward with and the solutions are inflationary, right? Now, no one knows what's really going to happen there. But for the most part, there's those things that you cannot control. And without the help, the assistance, and the public and private partnerships with the local municipalities, nothing's going to get done, right? Because we're not in the business to lose money. No one here is. So we need assistance. I think Live Local was actually, in theory, it's a great concept. I think if it was on board, 4 or 5 years ago, where construction costs was significantly less, it may have worked. And it could work down the road here. And maybe we are entitled in these sites where you're just land banking and assuming that, down the road, this could be something that can go vertical. But as of right now, it's just not working, and it's a problem.
Nitin, a few questions ago, you talked about converting these multifamily projects to condos. And I'm wondering, is there still reason to build luxury multifamily when we're seeing more conversions?
Oh, I think it's all circumstance. When you look at the cost, like that multifamily we started in 21, prices are very different in 24. And so the basis would also be there. Also, things change. Like in that building, there's an apartment building that already exists, and then separately a brand expansion of Flow that allows all of these amenities and all of this community that Adam's working to create. And people were saying, I love this. Whereas we are used to seeing 50% or so turnover as lease renewals come up. He's not seeing that because people are happy. So then they're saying, well, I missed this huge equity expansion over the last decade by being a renter. Is there a way that I could get ownership? And I get some equity amiss. And that prompted the concept of Flow House, because they can own that condo and then they don't have to move. And so that's a unique circumstance. I think there's been a lot of talk about converting there are complexities to it. There are a lot of costs to it, especially if you're trying to go to short-term rental. This is not a short-term rental product, but if you do, there's a lot of requirements the city makes you go through. So while we're hearing a lot about the conversion, we haven't seen as many, but every building's big, right? 400 units here, 500 units there, just continues to impact supply in a meaningful way, especially as starts stagnate.
What are some of those complexities of converting? I'm curious about the challenges.
There's just a lot of cost to it. I mean, there's insurance costs, which have also skyrocketed. There's the size of units that people want in an apartment versus a condo. There's, if you're going from traditional multifamily to short-term rental, R2 to R1 zoning, there you have to do a lot of ADA, which is incredibly expensive to do. And then you're going through the permitting process of our city, which is not the fastest. So there's just a variety of stats, a variety of expenses that come along with it, plus, of course, the legal is.
Yeah, and when you convert, what happens is you have to feel very comfortable that you're going to be able to sell out the project, because the efficiency of running a multifamily building is cost-wise is much less than running a condo. So as a developer, you do not want to get stuck where you sell 40-50% of the building and you can't sell the other 40 or 50% and you have to keep it and as rental stock. Because the HOA costs kill you. You just won't make any money. So you have to feel very comfortable that you can sell out all of the inventory, which sometimes it's more difficult, right? Because if you've got 300 or 400 units, so it's a lot of inventory to absorb. And you may go through the first 100 units, and all of a sudden the demand stops.
Jeffy, you exclusively do rentals. Given the challenges in building rentals right now, have you thought about building condos?
It's really not our business. We like to stay in our lane. I think that's kind of where sometimes you can get in trouble. But we did think about 2 assets of converting them before TCO into condo. But then we went back to the basics on it and decided not to go that route for various reasons. And a lot of the uncertainty too, because it's not for everybody, right? You're a condo developer, there's warranty issues on on your end. And then converting it is not the easiest task, as I'm sure Flo is going right through it right now. It's a pain in the rear. So, we just try to keep it simple and try not to go that route. But yes, I do think there's when you look at multifamily deals and developers like us, we trade on half rates. And cap rates obviously have gone up. The market has gotten pretty dry. Institutional capital has, it's definitely coming back. But a lot of these funds have pressed the brake. So what's the next alternative is, can you build this to a condo and can you convert it? Only certain areas can take the power riff, right? And generally those are assets that cannot be replaced. Because you're not paying $700,000-$800,000 for a condo in the middle of West Miami or in suburban locations. So obviously where these gentlemen built and they've done a great job, those locations are more prime or that type of build.
We had touched on this in other panels, but there's talk of a bubble in the condo market. EBS just put out that report. As developers, when you see something like that, how do you ingest it? Like, how much credence do you give it?
I don't think there's a bubble. At least it'll be very different from the last bubble. If there is, maybe a lot of the projects that are announced will not get off the ground. That may happen. But the projects, generally speaking, the projects that get off the ground are in good shape because the deposit structure is so different from what it was historically. I mean, these buildings are being mostly funded through buyer deposits that are 40 to 50% of the purchase price. That buyer is very unlikely to walk away from that, so they're likely to close. They're likely to close with not a lot of debt, so they're not going to be fire selling these units. So I think that it's going to be more difficult to get the projects off the ground that what a lot of developers think. But I think that on the delivery front, I don't see a bubble for me. maybe on some unit types, maybe you have, you know, the Airbnb thing or whatever, maybe, but overall, I do not see a bubble forming at all.
Yeah, I agree with Inigo. I mean, I think what's really happened, you know, many of you in the audience, if you're a buyer or an investor or you're an agent representing buyer investors, everyone's asking the harder questions. Who is the developer? When is it going to start? What's the viability of this project? Because everyone got a lot smarter. So to Inigo's point, the deposit structure helps keep everyone honest because someone is willing to give a deposit to us as developers. Now we have to earn that respect and trust from those people, which doesn't happen fly by night, right? Everyone's asking the tougher questions. And then as a result, when we build these condos, generally the two projects we have at Miami Worldcenter, the condos that we're building that are sold out, we have 32 and 34% financing respectively at very low leverage, 100% sold out projects. Maybe if we were a little less sold, we'd have a 40, 45%, but they're so low levered because of the deposit structure. And again, those deposits are coming with more scrutiny because people are much smarter about the questions they're asked and they're much more sophisticated. So there's a lot of announcements about a lot of things. There's a lot of conversations about what, is the election, what was going to happen with the election. I think that's all behind us. At the end of the day, people are moving here. We're becoming more and more of a global city. So we continue to benefit from South America, but now it's also Europe, the Middle East, India, China, all these different places that never bought here before. And so I actually think you're seeing, just like in the multi, you've seen a significant slowdown in starts. We've actually also seen that in the condo as well.
Yeah, that's 100% correct. Buyers determine price, right? At the end of the day, or someone's willing to pay sense the market. And I think for the most part, whether that's rental or whether that's on the houses side, but if you look at the supply, you look at the migration, you look at the starts that have gone down, I think a year or 2 years from now, you're going to stay asking yourself the other question, do we have enough? Because right now, we're not building at a fast pace to be able to get all the velocities, and the absorption that this market is really coming down here to South Florida. And to be honest, like, I mean, what a job, you guys have done in downtown Miami and on the skyline, what it looks like today as it did 10, 15 years ago. We're so much more mature as a city. We're growing. You want to be down here, tax reasons. I mean, there's not another place, you're thinking of Miami, if you're looking to locate to South Florida or just in the U.S. alone, if you're not from here and you come to look at Miami. Miami has everything it has to offer. The boundaries, the barriers to entry are crazy. They're insane. And I think it's just getting better. And let's not only talk about Miami, but talk about Broward and talk about West Palm. West Palm is in the first inning of what's happening. What they're building out their 2 million square feet of office building, they haven't even moved in there. Where are all these people going to live? You go to downtown, Palm Beach, and it's just flat. It's going to go vertical. All the financial institutions that are moving down here, I think education is getting better. So as far as everything that you look for in a city, we're there, and we're more than there. So I think you're just going to continue seeing that. And what is going to happen, and what we did see was kind of like there was almost a migration out of Miami to local folks because of all the migration that was coming in. It wasn't becoming horrible for lanes. So you tried to qualify. Broward started taking up. West Palm started taking up. Delray. So I think next you're going to start seeing Martin County take off. Like, there's the appointment centers, the education, all that stuff is in our favor. So I do not see that anytime soon at all.
And I want to use our last couple of minutes here to touch on short-term rentals, because we've seen all of these condo projects catering to short-term rentals. What do you guys see as the runway there? Is there room for more of this?
Well, I think a lot of people have been priced out of the market, especially Latin Americans, which are a big backbone of the condo sales until post-COVID. So it's very hard for them to afford the new ticket prices of Miami when you talk about $3 or $4 million condos. So it is a good way for Latin Americans to come back into the market, be able to have I guess, in Miami and rent it out even out here. Now, how will the operation of that be in the future, and how will the resale value that we'll find out when a lot of these buildings are operational. But as a product, it makes a lot of sense of why it has a place that it can in my state.
Yeah, so we did 2 of them in Miami World, Crosby and 600 Miami Worldcenter. And it's exactly what Inigo's talking about, because Miami's also changed, whereas people would come and spend a week or 2 a year. Now they're spending 4, 6, 8 months a year. But when they're not here, they want to monetize or create some income from it. And so we found that to be very interesting. The other interesting thing was we had a lot of buyers from Palm Beach and Fort Lauderdale and other parts of the state that used to just pop into Miami like it was nothing. And now they're like, I want to have a place to kind of, when I come to Miami, to stay for a couple nights. When Flow House was happening, we, in speaking with Adam, made the decision to not do it as a short-term rental because those options already existed at Miami World with Crosby and 600, so kept it at the 30-day minimum. And that's a different type of product, which is fully furnished also, but has more of that 30-day. So you know what you're buying, you know what you're getting into. Because I think some of the challenge which we experience in some of our condo project is with the short-term rental, when people are buying, they need to know what they're getting themselves into. Some people like the transient, they like the optionality, they like the flexibility, and some people don't. And everyone has that right to buy in that building and know what they're getting.
All right. I think we'll leave it there. Thank you so much, guys.